Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for November the 1st, Wednesday, 2018. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses. Our hypotheses are our trade plans. We do create multiple trade plans. We do not know what the market's going to do. Therefore, we create multiple hypotheses or scenarios or plans, wait for the market to open up, and then execute the plan that best suits the market once we determine who's taking control. And then we use the context of the market to shift from one plan to the next as the context change. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here in the go-to. Then we do live trading and analysis during the course of the regular trading hours. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please read your own due diligence, your own trade plan, and your own risk metrics. Taking a look at yesterday. Yesterday we had a open auction out of range. Our hypo one was a open auction out of range, a move down into the 2700 area. Find buyers and continue the auction up towards that microcomposite longer time frame VPOC at the 27 and a quarter area, and we basically played that hypo one out within the just beyond the first hour, and then we rotate back down and fail to go neutral, and then we get the extension up and we shift into hypo 3, which was the gap and go day, and didn't quite get up into the 40s as anticipated with hypo 3. We kind of stalled out, created a weak high here, and then we get this interesting sell-off, as a closing swing, and we actually go neutral and close, on the low tick, and we basically break the IB by 2 ticks, and we just run out of auction. So the normal idea when you see a neutral day, this was not neutral day, neutral extreme, because we didn't get the extension. We had an interrupted auction, and we were looking for them to extend this lower and come down and close the gap into in the Globex. But we only extended down to the 2704, so we only got like 6 ticks of extension. And if we take a look at the overnight, we open, we push down, and then they immediately start walking this up back towards that 27 and a quarter, 2750 area, come back down again, put in a higher low, and then we push up and we get right to the microcomposite VPOC at 27 and a quarter, and then sellers step in and they rotate us back down. And currently, right now, we've come back to the mid. Oh, I don't want that. It should be 8. We've come back to the mid and bounced, and we're just basically chopping around the overnight VPOC right now. So kind of a balanced night. Inventory is about 95% net long. We're going to be opening up in range, so we're expecting some responsive selling to balance the inventory overnight. There's 219,000 contracts. That's about double the normal volume. We've been seeing a lot of volume being put in the Globex as we get OTF and volatility, increasing. So let's just take a step back. First of all, let's take a look at earnings. I want to do earnings first because, again, most of the earnings that we're seeing are coming out and they're beating, or I haven't really seen a really big miss. U.S. Concrete would be one of the bigger ones I've seen so far. Um, but the key thing about today is we have aftermarket. We've got Apple and Starbucks, United Steel, GoPro, Kraft. Um, we've got some big movers. The big two really are going to be Apple and Starbucks, although United Steel is going to be important for industrial. But just keep that in mind that we've got these earnings coming out, and again, Apple comes out at 4:30, so just as the extended trading hours start, that half-hour stretch, there could be some opportunity there, whereas normally, you wouldn't bother trying to trade between 4:30 and 5 o'clock Eastern. Taking a look at the news today, we did just have uh, we just had the continuing jobless claims came out better than expected. Expected 1640, but really not that different. Although initial jobless claims was a miss, 214, but again, it wasn't a big miss. Non-farm productivity came out as expected, but unit labor cost was a bit of a beat, 1.2 versus 1. In terms of continuing news today, right now, we do have Bank of England Carney speaking. I don't know if he's still speaking, but he could be. We've got U.S. Manufacturing PMI coming out in 50 minutes, and then at 10 o'clock is the big one, and that's going to be the construction spending and ISM manufacturing employment, ISM manufacturing PMI, manufacturing prices, and then we've got natural gas, and then we've got all car sales and truck sales later in the afternoon. And sometimes these come out during the course of the day, but not really big movers. Don't forget that, it is the beginning of the month, so there will be some positioning. And then tomorrow at 8:30, we've got non-farm payrolls and unemployment rate. So we've got some market movers tomorrow that could give us some increased volatility on the weekend. So let's take a look at the macro as we like to do each day. We start with a simple candlestick chart and look at the macro monthly and work our way down. I use a 9 EMA, 20 SMA. What I'm looking for is where are we in each time frame? Where are we within the trend? Is it strong with good slope and separation of the moving averages with price paralleling the 9 nicely? Is it being challenged by a break of the 9? Or is it getting violated with a break of the 9 and the 20 and a possible trend change? You can see beautiful trend up. And then we have this big move, this October 347 point move back down. Basically, give up, go down and almost give up all of the gains for 2018. But we bounce off of the 9, and right now we're trading between the 9 and the 20. So we are, challenging the trend, but we did not violate it overall on the monthly. Going to the weekly, a little bit different story. We are in a downward trend, but we are seeing some positive movement this week back towards testing the 9, which is going to be in that 2790 area. But the trend is down right now on the weekly. On the daily, we had a nice trend going, good slope, good separation, prices failing to get back above the 9. And, right now, as of today, we're back above the 9 right now and trying to hold this 2710 area. And if we can, the anticipation is we move up to test the 20 and get a possible trend change back up on the daily, or we fail and get a continuation of the trend down. But right now, the trend is still down, but it's being challenged on the shorter time frame and is still positive on the larger time frame. Going to the 4-hour, you can see that we've taken the trend back, and we're getting slope and separation, but we're sort of pausing here in the lower 2600s right now. We don't want to see this 2709 breached again, because we could go down and test into the 2600s again if that happens. Going to the 30-minute, you see that we've basically been chopping around in the Globex, and we're breaking below the 9 and the 20 again, and seeing some weakness coming in. So if we take a look at the structure of this, we have the longer time frame microcomposite still at 2750, but if you do this in a Globex, the microcomposite is VPOC is 31. So we basically have a little bit of a range right now with VPOC ping pong between the 31 and the 2750. We came down and we fell out of this balance right here. We came down to the prior balance, pushed through a little bit, but they accepted value higher here in the 2654, and then they moved up to where they were trying to hold value up here in the 2712, and tried to continue up through and break out of the value area and get above that longer time frame VPOC, but they failed on the close yesterday, and we get this weird move, and we've got an inverted hammer right now from yesterday. So we don't want to see us go bid below the low of yesterday at 2704. That will trigger, the probability that will likely come down and at least test this 2693 area. 2693 becomes our key line in the sand below, and our key line in the sand above is up here at the 2750. Otherwise, we're likely to see chop. If we hold between the 9350 and the 5050, we're likely to see some time spent in this area coming into November as we see some positioning, and we just could get stuck in this wick here today, even if we hold above this 271150 microcomposite VPOC. We're likely just to get stuck here in this wick from yesterday's late day sell-off and chop around the 27 and a quarter. But the key right now is to hold the 2707, or the low of this hammer, at 2704. Anything below that could trigger some more selling. So just keep that in mind. In terms of inventory, we're about 95% net long. Key levels to pull from the overnight session. Overnight high 27 and a quarter, right at that microcomposite VPOC. The overnight low 2704. I'm sorry, I was saying 2704 is the low. You can use the 04, but I'm going to use the 06 as my over underline. And then our key line in the sand above remains at 50.50, and our key line in the sand below remains at 93.50. The average true range is running at 59.53. That is the 20 period full session average true range. So based off the overnight low of 2704, our upside daily ATR is all the way up here at 63.50. So that gives us the ability to get back up into the 60s. And the daily downside average to range off of the high overnight of 27.25. It's all the way down here at 67.75. That gives us a pretty big range capabilities, okay, of where we're sitting right now. So, you know, keep in mind the key lines to pay attention to if we get some movement. In terms of hypotheses, normally because of the neutral, we did stop the one time framing down with the move up to the 27.37.25, but the sell off into the close and going neutral is something that we have to pay attention to. So again, I hate when this continues to happen, but hypo 1 and hypo 2 have to have equal weight. Now we are back into the 2700s and near a major magnet, so my hypo 1 is still going to be the same as it was yesterday, which is a balancing of the inventory, a responsive selling down into this 2711 to 2706 area, and then having buyers step in and rotate us up and take out this overnight high up here at the 27.25 and continue the auction up towards the 37.25. I don't think that I think we could get an inside day and a smaller range today because of it being the 1st of November. But I do expect it to grind its way up towards this 37.25. If we can break 37.25, the target's going to be up here in the 46.50. So hypo 1, open auction, in range, in value, a move down to test the value area low, and somewhere between the 11.75 and the 06.25. Buyers step in, rotate us up, and taking out the overnight high and coming back up into balance, and then grinding up and trying to break out, but unlikely to break out and come down and close somewhere around this 27.50 magnet, 27.25 microcomposite VPOC. That's type of 1. Equally weighted is a open auction, in range, in value, a move up into that 27.25. Failed to take out the high of the overnight, or just take it out but don't get any continuation. Sellers step in, rotate us down into the 27.11, chop in this lower area, and then push down and come down and close the gap, but find buyers and close somewhere up here near the 27.11. So basically a attempt to go higher, failure, push through yesterday's low, close the gap, come down and close the gap, but fail to continue lower and bounce off of this 93.50 and come up and close in the 27.11 area. That is hypo 2. Hypo 3 is going to be and again, because of the context, hypo 3 and hypo 4 will have equal weight as well. So it's whether or not we get continuation of hypo 1 or hypo 2. So hypo 3 will be a continuation of hypo 1, open auction in range, push up into the 27, accept the 27.25, and then get continuation and push up, and then come up into the 46 to 50 area, break above that key line in the sand, and come up, and the target on hypo 3 is up here in the 27.60.25 area. That is hypo 3. Equally weighted, continuation of hypo 2, open auction, a move up, failure to take out the overnight high or just take it out, but sellers step in, rotate us down, come down into the gap fill, chop here, and then fail and push down and come down and actually close the gap down here, down at 84.50, chop in this area and possibly get a liquidation break back down towards the 26.70.75. That is hypo 4. Hypo 5 is going to be an inside day, and basically failure to break 37 and a quarter or 0575 and basically chop inside of value between the 27 and a quarter and 27 10 area. That is hypo 5. Going to gold. Oh, don't want that chart, sorry. Gold came right down to that 13 level and bounced. So now we bring today in and we're right back into balance. Nothing's changed. Nothing's changed. We come down, we test the key area CLVN at the 13, and we bounce and we rotate up $19, and we're right back into this balance around 31. So just again, key levels don't change. We want to watch this 36, and we want to watch this 25. Break of 25 brings us back testing this. The next time down here, okay, I do not expect to bounce off of the 13. I expect to blow through this, and I expect to move back towards this 1202 area. But we found our buyers again, and we're back in value. A break above 36, 37, looking for continuation up to test the upper area of that 45, 46. And if we can get through there, the continuation to the next big target above, which is up here in the 65 area. So that's what I'm looking at in gold. That's only going to that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.